Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. His website, CanadianInsider.com, home of the Canadian Insider Club. Welcome back to the show, Ted.
Jim, thanks for having me back, and thanks for everyone listening in.
Ted, what's going on with silver, the quiet precious metal?
Well, it has been quiet for the past few years, but it did make its mark last week when we had a very out-of-the-box U.S. CPI report. Came in hotter than expected, and what we saw in the ensuing days, the gold-silver ratio fell, and what that means is that silver was outperforming gold, and that's really important, I think, for the mining complex in Canada, the Canadian markets, because if you see silver outperforming gold, that's an indication that inflation has some momentum, and that for the whole industrial commodity complex, because silver is, as I'm sure the vast majority of your listeners, if not every single one of them, know that, silver is more industrial oriented than gold. If it's outperforming gold, then that's a good signal for the rest of the mining complex as well, outside of gold. And gold, it will do fine as well, because gold is also going up. It's just that silver is going up faster. So why that's important then is, if silver is outperforming gold, then it shows that there's some inflationary impulse that's really has some legs, and that we're probably not at peak inflation. And I'm sure there again amongst the House Street listenership, that is not breaking news. But to pension fund managers, Wall Street money managers, even Canadian institutional managers who got paid handsomely by avoiding the energy complex, for example, for a decade, the idea that inflation could be here for a while is a foreign concept, and they're still getting their heads around it, and many are still anchored in the experience of the past decade, and they still don't believe it. Now, at some point we will hit peak year-over-year inflation. The question is, does inflation go back towards that 1% where everyone can start talking about deflation again? Oh, we're going to have deflation, and we heard that for a decade. Does it head back there, or does it stay at an elevated level, 2, 3, 4%? That's the debate that I think that we would have if inflation were to even peak, but really fall off rapidly. So at this point, having the gold-silver ratio fall is a very good thing for the Canadian market, and that is what we've seen since that big inflation print, a lousy bond. There was a lousy bond auction on the same day, I believe it was in the 30-year. So it's good to see that the gold-silver ratio has fallen. It's basically continued to fall since then. Now it's at a really kind of important level, just kind of doing this head and shoulders pattern, and it would be nice to see it break lower. It hasn't done that yet, but you can follow it on Canadian Insider. We do have the gold-silver ratio on our site for free, and keep an eye on that, because the lower it goes, the better for the commodity complex. And, it'll be nice to see if it can break sort of down below 72. That would be the next sort of thing we'd be looking for. But, maybe it'll stay in a consolidation range here. And then, as we head into Q1 2022, we have a whole different set of macro fundamental dynamics at work and political dynamics at work, and that could require a bit of a reset in inflation thinking and commodity price market and thinking, like the price outlook for commodity markets. But at this point, the gold-silver ratio is our friend, and it's moving in the right direction.
We'll have more with Ted Dixon right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, have Canadian investors been rewarded for staying close to home?
They have been. This has been a great environment to be invested in Canadian stocks, unlike the previous decade, where all you had to do is buy, U.S. passive index funds, and you were off to the races. Over the past 12 months, and this was as of last Friday, the Canadian Insider Index, which is a basket of 50 mid-cap oriented Canadian stocks, highly geared towards inflation expectations, up 61% for 12 months compared to 32% for the S&P 500. So it doesn't get much better than that, So it's been a great time to be to stay home in Canada, and we'll have to see for Q1 2022. But at this point, as we head into year end, we know that the Canadian market is home to many resource stocks. It's also home to a number of digital asset opportunities, including there's a couple, I believe, Bitcoin spot ETFs, and I believe there's an Ethereum, one or two spot Ethereum ETFs. I'm not recommending any of these, but I'm just saying, if one's looking for opportunity, we've had exposure to some of the hot areas over the past year, and so it's been a great place to be. Now, looking in the rearview mirror, it's not a great investment strategy, although it worked pretty well last decade, because all you had to do was what you did last month, which was buy passive index funds. But going forward, we will have to see. We talked about the gold-silver ratio in the first segment. If that continues to trend lower, that would be a good sign. But, we are going to have to take a look and see what happens in Q1. I think right now, though, as we end the year, it's looking good in the specialty mining area. We're seeing rolling, I would say, enthusiasm in different areas, and it really moves fast. So, I think you have to keep your eye on the ball in terms of what your overall view is on the industrial metal space, and you just kind of can't be shaken out by volatile moves. We saw zinc stocks move up, in October, and then now lithium stocks have taken a charge here. I think you're going to see this back and forth amongst different groups. It's going to be the nature of the market we're in, with the Fed dragging its feet on raising interest rates and inflation being elevated. We're going to get these kind of gyrations, and it's not the smooth sailing that we had back a decade ago. It's a very different market, and Canada is still looking pretty good. So, that's heading into the end of the year. We'll have to reassess, though. There's two competing narratives for 2022 that I hear in the market right now. One is that the inflation is going to be stronger and more persistent than people think. Yes, it may come off the boil a bit, but you're still going to have years and years to work out these supply chain issues. It's not just COVID related. It's also you got the geopolitical U.S. versus China situation, and you've just got changing workforce demographics that are playing havoc with the U.S. labor market. So there's that argument. Then there's the deflationists argument, who they've been quiet the last few weeks, 2 months, but they'll be back, guaranteed, and they'll be talking about the fiscal cliff out of the U.S. that Joe Biden's not going to get a $3 trillion package. He'll be lucky to get $1.5 trillion package. What I'm talking about that is his Build Back Better social infrastructure plan. We're going to be getting some costs out of the CBO, that's the Congressional Budget Office, in the next few weeks. So that will set the tone, I think, on what can be expected. So there's going to be chatter that there's going to be less government support for the economy. And that was a key driver of demand, which is true. I agree with that. Like, that's a part of the reason we have these inflationary and supply bottlenecks, is that the government threw so much money at people during COVID that there's a lot of residual demand. But, the Fed can cure that by raising rates, but they're not going to do that anytime soon. They may do it sometime in 2022. That remains to be seen. But, okay, two narratives. Well, inflation will be persistent, but there's going to be this fiscal cliff, and that's going to hurt demand. So we're going to have to see how that plays out, and the market will probably vacillate between both narratives, and it'll, again, be choppy. There'll be periods of euphoria where I think you'll see Canadian stocks do very well, then they'll sell off as the bond market rallies, and, so you have these competing forces. This D versus G economy dynamic isn't going away. The D meaning deflation-oriented economy, and stocks such as, healthcare, utilities, technology, that would tend to do well under that environment, relatively speaking, versus G economy, resources, industrial, those stocks that can pass along price increases to the end user. So, and in the middle, you can have crypto. And we wrote a piece in our market report about crypto, like what's the outlook for crypto in general. I think they too face these two competing forces, where if you have inflation pushing up bond yields, and that's not a given because it's not what happens yet, but if let's say bond yields were to fly higher, that would be a negative against primarily, I think, the whole space would probably take a hit, but the hardest hit by those factors would be the longer dated projects. What I mean by that, like crypto projects that are sort of just getting going, that have, a lot of build out to do, and I would include Ethereum in that, although that's probably, maybe a 3-year horizon in terms of maturing its next phase. Solana, which we've talked about in our newsletters a lot, well before it was popular, and then a number of others, that they would have a headwind, higher rates. However, on the positive side, they're also disrupting the financial system, and that's a theme that is really interest rate neutral and uncorrelated. That's a technological and people oriented. It's basically people saying, we have better alternatives in decentralized finance, in these other, in these protocols that offer us a fair yield as opposed to government controlled yield, which is what we have in Canada and the United States. It's not a free market. It's a government controlled market. And just like China, right? Like they have a controlled market. Their economy is driven by a central bank that sets everything. Well, same in North America. People don't, necessarily think about that in those terms, but, unfortunately, we both have central planners running the monetary systems in both political systems. They have one thing in common, and that is central planning when it comes to monetary policy. So crypto is trying to provide an alternative to that, and that's why you see regulators frantically trying to slow down crypto. I think they realize they can't stop it, but a lot of them are trying to slow it down as much as possible. So you're going to have competing for, of course, so regulation is always going to work against crypto, but in general, we'll have to see if the disruption part of it is stronger than the potential higher rates, and that's not a given, and the regulatory continued regulatory attacks, which is a given, which will continue to come. And there's an argument that that's actually good. It brings in institutions. So that's a whole different topic. It changes the demand dynamic for those investments. And so that's a completely different topic. But in general, I think in the shorter term, medium term, regulation, we'll have to see how I don't think it's a positive in the short term. Maybe it'll be a neutral. But yeah, so regulation, for crypto, negative, but financial disruption is positive. On balance, my personal view is the financial disruption will win out, but that's over the medium term. In the short term, these other factors could work hard against crypto. And, we will just have to see. I can't make a prediction on what works, but, it will add to the volatility of crypto. In the meantime, in the stock market world, you've got the G versus D economy. We still like a barbell approach, looking, having exposure kind of to both areas, just because it's uncertain, really, which narrative in 2022 is going to win out on balance. The fiscal drag, the U.S. economy disappoints, or inflation is sticky, and that will help G economy stocks. And look, they could both win out, and then you got stagflation. So that could be what's in store for 2022. We will have to see.
How are insider Canadian energy backers doing?
Well, they're signaling to us that there's some that there's the real juice in the energy rally is in the rearview mirror, and it doesn't mean that energy stocks can't keep going up. We just, based off of our signals, it's kind of due for a pause here. And today, when we're recording this, Jim, on Wednesday, I see Joe Biden. There's stories that he's tapping the strategic petroleum reserve to unleash some barrels of oil onto the market. It sounds to me a bit like desperation, but that doesn't matter. It knocked crude oil down, and I think it shook out some of the more speculative positions. And so that's a fact. I think a healthy development. It's just, I don't know, healthy. It's everyone says that, right? When something goes down, if you're long, it's not so healthy. But if you've missed the rally, it's healthy, and it might knock down some equity prices. But I think that the 12 to 18 month outlook for the energy sector in Canada is still pretty good. We did our top 40 report. We released it on Wednesday. It is dominated by energy stocks. We have 50 40 stocks in the top 40. That would make sense, right? That's what we call it, the top 40, and over half of them are in 26 are in the energy sector. So there's no shortage of names that continue to show up positively on our screens. But on the broad sort of sector level, it wouldn't surprise us here if the sector kind of takes a pause into year end. And, maybe the strategic petroleum news was, the news catalyst to sort of take some of the wind out of the sails of the sector for a little while. We'll have to see.
Ted, thank you so much for chatting with us.
Jim, thanks for having me back. I really appreciate it.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted, we'll ask that question for you if you send it to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.